Hi there, my name is Russ Horn, and I've got a gift for you that I think you're really going to like. This one is a trading system called the Profit Oracle, and I really do like this system a lot. Download the Profit Oracle, download the indicator that comes with it, and then watch the videos. I'm going to show you how to install it. I'm going to show you how to save a template for it. I'm going to show you how to trade the Profit Oracle. You're really going to like this one. I like it. Underneath that, you can check out a link that takes you to the Levelator Pro. I'd like you to check that one out. And then underneath that, you're going to find that there are several other trading systems. Now grab those before they disappear because they may not be here for much longer. Now, underneath those other systems that you can download, you'll find a comment section. Download and try the Profit Oracle. Again, it's a system that I think you're really going to like. Try it out and then leave me some feedback in that comment section. I do appreciate the input. I do appreciate the feedback, and it helps me provide you with a better product. All right, let's get on with the Profit Oracle. Now that I've downloaded my MACD two-line indicator, I am going to install this onto my trading terminal. So first I'm going to open up the zip file. Now I've got the MACD two-line .ex4 with WinRAR. What I can do is just drag it out of that folder. You may need to extract it. Whatever the case, you need to get that file out of that zip. So now that I've done that, I've got my MACD two-line indicator. It's an EX4 file. You can't open it. It's just going to be inserted into the platform. So I'm going to open up my platform. And then from here, I'm going to click File. Now this is an open MT4 chart. File, click on Open Data Folder. And this will pop up. Now, this is the file folder where all of the different MT4 stuff for your particular platform is going to be kept. I want to double click to open the MQL4 file folder. And then I'm going to take my MACD two-line, drag and drop it right into the indicators file folder. So now that indicator is in the indicators file folder. I don't need this window. And now I'm going to close my MT4 platform. This is going to help initialize the indicator. So now that I've closed it, I'm going to reopen it. And now I've got a new MT4 platform. So here, if I go to my navigator, I'm going to see that I have the MACD two-line indicator in here. Now, before I do that, I'm going to start with a brand new chart. We're going to create the Profit Oracle template. So we're going to start with a brand new chart. We're going to open it right from scratch. So we'll File, New Chart, and I'm going to choose the Euro USD, which I'm not seeing here. So what I'll do is open something else and then double click down here, Euro USD. All right, so now I've got the Euro USD. This is the default bar chart. I'm going to click on candlesticks at the top, turn it into a candlestick. I'm going to zoom in just one more. And then from here, I'm going to right click. I'm going to turn off the grid, maybe right click again. Click Properties under the Colors tab. I'm going to turn the grid right off. I'm going to turn it to none. I don't want the price line. Now this is up to you. Keep it if you like. I'm going to turn the price line off. So now I've got my default white and green. I'm going to leave it like this. I'm just going to keep the white and green chart. So at this point, I am going to go back to that navigator window, MACD two-line. I'm going to drag and drop it onto the chart and simply hit OK. So now I've got my MACD two-line indicator. This is a nice indicator. I'm going to go through it a little bit more, but right now we're just setting up the template. So I've got the MACD. Now I'm going to add a couple of moving averages to my charts. So I can do that from the navigator, or I can do that from the indicators list. Go to trend, moving average. Now, moving average is at the top for me because I've used it recently. Yours might be a little bit lower. click on moving average. What I want is a 5-period simple moving average applied to the close. I'm going to do this one Dodger blue. Hit OK. So I've got my 5 simple moving average. Again, indicators list, moving average. This one is going to be 55, also simple, applied to the close. I'll make this one red. So now, this is it. This is all I've got to do to have all the indicators for the Profit Oracle. What I'm going to do now is go to my templates button here. Click templates and then save template, because I'm going to save this. I want to be able to apply this to any chart. So I'll go Profit Oracle. Now I've already saved one, but I'm just going to save it again. Click save. I've already got it, so it's asking me if I want to replace it. If you don't have it already, you won't get this message. Click yes. So now I've got the Profit Oracle saved to my charts. If I open up a brand new chart, I can apply the Profit Oracle, and it's going to give me the Profit Oracle template applied to the chart. Now I'm going to give you a very quick overview of one really cool feature. With the Profit Oracle, the MACD, I'm going to use almost specifically the histogram. So if I double click on the MACD, I can choose to turn the lines, the MACD line and the signal line off. So by double clicking and then clicking false, I can turn off those MACD line and the signal line and just use the histogram itself. Double click, click true. Okay. And that is the Profit Oracle installed, set up, saved as a template. You can apply this now to any chart. And in the next video, I'm going to show you the rules to the Profit Oracle. I'm going to show you a couple of trend following trades. I'll show you one long example. I'll show you one short example. I'll show you the rules, where my stop loss goes, how the take profit is placed, and so on. Now, first of all, in order to take a trade that's with the trend, we've got to first establish a trend. How do we know the trend direction? Well, we've got the 5 SMA and we've got the 55 SMA on the chart. Now, when the blue 5 SMA is above the red 55, the trend is up. When the blue 5 SMA is below the 55 SMA, the trend is down. So when the blue is below the red, we've got a downtrend. When the blue is above the red, we've got an uptrend. So when we're trend following, we are going to take trades only in the direction of the trend. So if the trend is up, we're taking long trades. If the trend is down, we're taking only short trades. Now, what is a trigger for a trade? When the trend is up and the momentum is upwards, the histogram on the MACD is going to be green. We're going to have it above the 0 line and it will be green. So we have upward momentum. In order to take a trade with a trend, we need to first wait for the histogram to be red and then turn green. That first bar that turns green is the signal to go long. So if I place my vertical line over the first green histogram bar, that is this candle here. When this candle closes, it'll print this green histogram bar. That is the long signal in trend following trade. Now we've got another one here. We've got the trend up. We've got the first green histogram bar, and that close would give us the signal to go long. Our stop loss would go just below the most recent swing low. So I'll just draw a stop loss. So on this trade, the most recent swing low is in here. So we'd go long here. Stop loss goes just under the most recent swing low. When I'm trading with the trend has a really good possibility to move. When we're going to trade in the trend direction, there is more potential for the market to move the furthest. So what I'd like to do is place 2-to-1 targets. So if my stop loss in this case is 40, let's say 50 pip stop. Let's say I got a 50 pip stop loss. I want to place a 100 pip profit target. This is going to be a 2-to-1 risk to reward, or reward to risk is the way it is. It's a 2-to-1 reward to risk ratio. So if I've got a 50 pip stop, I'm going to place a 100 pip take profit. If I've got a 20 pip stop, I'm going to place a 40 pip take profit. So I've entered the trade and I've placed my take profit. Now, the way I would get out of a trade if the trade goes bad, if it doesn't get to my 2-to-1, now you don't have to go for 2-to-1. You can go 1-to-1. That is really common and that is really secure. But if I'm going for 2-to-1 and the price doesn't get all the way to 2-to-1, the way I'm going to exit the trade early is I'm going to watch for the histogram to turn red. As soon as that histogram goes from green, where the entry signal is, to red, then I'm going to get out of that trade. That trade now is telling me, the market is saying that the momentum is gone, that upward momentum is starting to fail. I don't want to be part of this trade anymore. So I'm going to be out of that trade. Now, I may not get to my profit target. It may not get to the 2-to-1. So I'm going to be watching for that histogram. And I'm almost always going to secure some profit. If the market turns fairly quickly, I'm going to get something out of that trade. Or if I don't get something, my loss is going to be reduced anyway. So I'm not going to lose the entire amount. Now you can move your stop loss to break even once you hit that 1-to-1 mark. So if I've got a 50 pip stop loss and I get to 50 pips in profit, once I hit that 50 pip mark, I'm going to move my stop to break even. So I'm not risking anything on the trade. I'm going to let the rest of that trade play out, get my 2-to-1, or I'm going to get out a little bit earlier when the histogram changes colors. So let's look at a short example. Now, a short example would be when the price is moving downward. So we have the 5 SMA underneath the 55. So that is the downward trend. Again, the same rules will apply. We can look at this one. We can look at a previous one. We can look at this trade here. What we're doing is I'm going to be placing my stop loss. Let's just use this one. We'll get rid of this one. I'm going to be looking at getting short on the close of this candle. Once this candle closes, it'll print a red histogram bar. That is the trend down. The momentum is starting to pick up to the downside. We're looking good for a short. So what I've got at this point is my stop loss is going to go just above the most recent swing high, which is going to be right here. So this is my entry. My stop loss goes just above the most recent swing high. And my take profit, see if I can grab, I can't always grab that. It's going to be 2-to-1, which is going to be about here. Let's get the crosshairs and find out for sure. So it's 30 pips. So I've got a 60 pip take profit. How about that? So I've got my 2-to-1 and I have a couple opportunities. This is a nice example of how this potentially could stop us out early. What's going to happen is I'm going to get my first green histogram and I could get out of the trade at this point. Now the trade has not progressed. It hasn't gone in my favor at all. So there's a good chance I'm not going to get out of this trade just yet. The trend is down. The trend is intact. And I like the way it's going. So because I was never in profit, there's a good chance I'm not going to pull the plug on it just yet. But let's say you did. Let's say you did get out of this trade. How much would we have lost on this one? 12 pips. Let's call it 15. So even though we had a 30 pip stop on this one, just by looking at the histogram bars, we had cut the risk on this in half. So if I was risking 2%, I would have been out with 1%. And that is terrific. What that means is we're going for 2-to-1 and the stop was reduced. I didn't even have to hit my full stop. And even if I did, we'd still be making money. All right, I got another opportunity to go short, be right here. So the stop loss would go just above in these videos, I have a tough time grabbing those lines. So a stop loss just above the most recent swing high. Let's see how much that is. So we're looking at approximately 30 pips again. So we're going for 60 pips. So that will be not quite. I don't think we would have been taken out. We would have been on this candle here. So we would have got these 60 pips. Now, an alternative to placing a stop loss that's 2-to-1 or 1-to-1, if that's what you're more comfortable, is just holding on to the trade until the histogram changes back to a different color. So in a short trade, we could hang on to the short trade until we get a green histogram bar. And that would be on this candle right here. So we'd get in short and we'd hold on to it until this candle here. Then we would get out because the histogram has changed color. The momentum is starting to fail and we're out of the trade. So that is the trend following system. It's really straightforward. It's really simple. You just trade the color of the histogram to the direction that you want to go. So if you're trading short, you want the red histogram to show up after a green. The green is kind of like the pullback. We're looking for the pullback, and then we're looking for the trade in the direction of the trend. For the long trades, we are looking for the red histogram and then a move with the trend as the histogram turns green. And again, we can hang on to the trades until we hit 2-to-1 or 1-to-1 or the histogram changes color. So we're here, get out here, 73 pips just by paying attention to what color the histogram is. A couple of options for you. Really nice and simple, very straightforward. When the market's moving, we're going to get some nice clear signals. And when it starts getting choppy, we're going to find that the trend is going to show us the opposite direction. We're going to see that the momentum is failing. This is a difficult area to trade because the market is quite choppy. But we don't have to worry about that so much because the histogram has turned red. So we wouldn't be trading this one anyways. Once the momentum is picked up, the histogram turns back to the trend color and the market takes off. All right. Stay tuned for the next video. I'm going to show you how to trade counter trend. I'm going to show you now how to trade counter trend. We know that the trend is up when the 5 SMA is above the 55 SMA. We know that the trend is down when the 5 SMA is below the 55 SMA. So we've got trend following under our belt. The previous video shows you how to trade with the trend. Now I'm going to show you how to trade against the trend. Trading against the trend is dangerous and difficult to do if you don't know what it is you're looking for. When you have a prevailing trend, the market wants to keep going in the trend direction. So trading against it can be a dangerous proposition. I'm going to show you what it is you need to look for. We are going to use the MACD and we're going to do something. We're going to look for something called divergence. This is called regular divergence. In this example right here, I'm going to show you regular bearish divergence. We're going to see a divergence setup that is going to result in the market moving down, bearish divergence. In a trend, market makes a high, makes a higher high, makes a higher high, and so on. This is a technical trend. We have consecutively higher highs, consecutively higher lows. We have a low followed by a higher low, followed by a higher low, and so on. It keeps moving up. The market wants to keep doing this. Now, what we're looking for when it comes to divergence is we have the highs being made by the market, and we want to see that the indicator, the MACD, is no longer doing what the price is doing. Here we've got a high followed by a higher high. The MACD indicator, I'm looking at the histogram specifically, the red and green bars here, makes a high followed by a higher high. It's mimicking the price. In this instance, we have a high followed by a higher high. Market's still climbing, but the MACD itself, the histogram, the green parts, they are falling. They're dropping. What this does is shows us there is weakness in this market move upwards. Market is climbing and it looks fairly aggressive. It looks like it's moving really well, but the behind the scenes, the MACD, which I consider to be the best momentum indicator there is showing us that the momentum is failing. Once I have this regular bearish divergence, I am going to take a trade towards the 55 SMA, this red line on the chart. Now, I've got the divergence. I've got the price rising, making higher high. Price on the histogram is making a lower high. How do I get into a trade at this point? Well, I'm just waiting for the histogram to turn color, to turn red. That's the direction I want to go. So I've got the red histogram bar on the close of this teeny little candle here. Now from here, I am going to take a trade that is going to go all the way to the 55 SMA. Sometimes that's going to be a long way. Sometimes it's not going to be so far because the 55 isn't too far away from the price. But when I get divergence, the 55 SMA is going to act as a very strong attractor. It's going to want to pull price to it. The 55 SMA, you're going to notice price is going to be drawn to it and bounce off of it over and over again. And when we get divergence, we have a very strong indication that the price is going to be drawn or pushed or pulled towards the 55 SMA. So I've got my short signal. We've got the divergence set up. Now when the histogram turns red, this is the short signal. My stop loss, that's not what I wanted. My stop loss is going to go just above the most recent swing high. I've got my entry, and then I'm going to keep that trade until it gets to the 55. Once it hits the 55 SMA, the trade's done. I'm going to close the trade. We're finished. The trade is done. Price is often going to bounce off of that, so it makes for a good target. So I don't want to hold on to it any longer. Now, how am I going to get out? Price may not get to the 55. It might do something like this where it gets close to the 55, but doesn't quite get there. Usually it will, but if it doesn't, what are the heads up? What's something that I should be looking for? And that is when the histogram changes color again. In a short trade towards the 55, I'm looking for the histogram to be red. The MACD histogram should be red during the whole ride. And then if it doesn't get to the 55 and turns green, I want to exit that trade. Otherwise, I'm going to hang on to it and it's going to hit the 55. Now, I've got another example of a long trade. This one in here. So what I've got is a low followed by some lower lows. And what I want to see is a red section in the histogram, turn green, back to red. Now these are going to represent the lows. We call them the corresponding lows. This low is this low. So what we've got is the corresponding MACD low to the price. We've got the corresponding MACD lows to the price. So if I draw a line underneath, now this line is simply to show me that the price is indeed sloping down. We are making lower lows. We have on the MACD higher lows. So in a downtrend, again, this is counter trend. We're trading long in a down market. So the 5 SMA is underneath the 55 SMA. This tells me that the trend is down. So if the trend is down, price is going to be making consecutively lower lows. We want to see that the MACD generally follows suit. However, when we get the divergence, price is making lower lows, but the MACD is showing us incredible weakness in the price. It's showing us that it can no longer keep making these lower lows. So it is going to start making higher lows. It's going to start doing a different thing, diverging. It's going to be doing a different thing than the price is doing. How do we take advantage of this now? All right, what we're waiting for is once we've discovered that we have that bullish divergence, because as a result of the divergence, the market is going to rise. I'm waiting for the MACD histogram to turn green. That is going to be the signal that we need to get long. So on the close of this candle right here, we are going to take a long trade. It is closed, and as a result, the MACD histogram is green. That close is going to send us going long. So our stop loss is going to go just below the most recent swing low, which should be here. Entry here, stop loss under here, and we'll hold on to this until we get to the 55 EMA. And you can see how the 55 acts as very strong support and resistance. It's called dynamic support and resistance. It's moving as the price moves. price bounces off of it, gets through a little bit, bounces off, bounces off, bounces off, like we can see all over why this is such a good moving average to target. So we have a stop loss of about 22 pips, a take profit of close to 30, 25, 26, 27 pips. So we're looking at about 1-to-1. These counter trend trades are not always going to give us huge rewards. When you're following the trend, you can get a little bit more out of them. When you are trading against the trend, the opportunity is still there, but you're not always going to get a huge dollar amount out of this. And that brings me to the next thing, is if you get a divergence signal and the price is very, very close to the 55 EMA, you have a stop loss, let's say, of 50 pips, but the room from your entry to the moving average is 25 pips. This is not a good reward to risk ratio. I want at least 1-to-1, which means if I have a stop loss of 50 pips, there should be about a 50 pip space between my entry and the 55 EMA. If I don't get at least 1-to-1, I'm not going to take the trade. I'm going to leave that one alone and I'm going to wait for the next one. They're all over the place and they work on all different time frames. So you're not going to have to wait for too long. So that is divergence, trading against the trend, counter trend trades. You find that it's going to work time and time again. Thanks for watching, guys. Take advantage of trend following, take advantage of counter trend with the Profit Oracle.